Bitcoin's biggest buyer on the planet just went completely silent, and right at the exact moment he stopped buying, something happened in the dark that almost nobody is talking about. For weeks now, you've been watching Bitcoin slam into $80,000 and get knocked back. 2 weeks of it. $79,000, $80,100, $79,200, $79,900. The same wall over and over. And most people watching this chart think they know the story. Bitcoin's stuck, range bound, boring. But here's what just happened in the last few hours and why it changes everything you think you know about this chart. Let me give you the raw numbers first. Bitcoin is trading at approximately $78,800 right now. In the last 24 hours, $211 million in Bitcoin futures positions got liquidated, and around 70% of those liquidations were shorts, not longs, shorts. While the price was range bound, traders who were betting against Bitcoin got obliterated while the price barely even moved up. That is not a normal liquidation pattern. That is the market slowly, methodically squeezing out the people on the wrong side of this trade. And open interest, the total amount of money sitting in active futures positions, is still sitting at $58.71 billion. Nearly $60 billion, still in the market, still waiting. Now, here's what makes this specific moment different from the last 14 days of the same $80,000 battle. Something changed this week. Two things, actually, and they are moving in completely opposite directions. Stop, look at this. Michael Saylor, the CEO who turned his company, Strategy, into the world's most aggressive Bitcoin buyer, just announced he is not buying Bitcoin this week. Not a single coin. For the first time since he broke a 13-week buying streak in late March, he has gone deliberately, publicly quiet. Strategy now holds 818,334 Bitcoin at an average cost of $75,532 per coin. They added roughly 89,600 BTC last quarter, the second largest quarterly purchase in their company's history. While the price was falling more than 20%, every single week through the crash, Saylor kept buying. And now, silence. He posted a chart on Sunday. Orange dots on a black background. His signature. And then nothing. This week, no buy. So why does one man's buying pause matter to you? Because Saylor hasn't just been a buyer. He's been a structural price floor. Corporate Bitcoin buying has effectively consolidated around a single firm. Strategy holds approximately 76% of all Bitcoin owned by treasury companies. When the world's largest Bitcoin buyer goes quiet 2 days before its quarterly earnings report, and on May 5th, tomorrow, the market is watching that call like a hawk. Because if Saylor signals that the weekly buying is done, even temporarily, Bitcoin loses its most consistent source of demand at the exact same moment institutional ETF flows just went negative. Most people watching this are going to look at Saylor's pause and get scared, and that's exactly the wrong thing to focus on. Because while everyone's eyes were on Saylor, something completely different was happening on-chain. Something that took place over the past 30 days, mostly in silence, almost no coverage. And it is the most bullish on-chain signal Bitcoin has printed since 2013. Wallets holding 1,000 Bitcoin or more, the wallets we call whales, snapped up 270,000 BTC over the past 30 days, the biggest monthly accumulation since 2013. And at the same time, the total amount of Bitcoin sitting on exchanges, the coins available to sell, just fell to a 7-year low. The last time exchange reserves were this depleted was December 2017. And if you know your Bitcoin history, you know exactly what happened next. BTC broke $20,000 for the first time in history. Let that sit for a second. The coins are being siphoned off exchanges. Whales are loading up at the fastest rate in over a decade, and the price is sitting right at a critical level where a break either way triggers a cascade. This is the rubber band setup. Imagine you're pulling a rubber band. Every time you try to stretch it in one direction, someone's pulling from the other end. That's what's been happening at $79,000 to $80,000 for 2 weeks. The whales are pulling the band by buying and removing supply. The short sellers are pulling from the other direction, betting the price falls. And right now, the rubber band is stretched tighter than it's been in months. When it snaps, and it will snap, someone gets hit in the face. The question is, which side? In about 20 seconds, I'm going to walk you through the exact 2 scenarios playing out tomorrow. and the specific price levels that decide which one is real. But first, let me take you back through the last few hours of this chart, because there are 3 moments that most people completely missed. At some point in the early US session today, Bitcoin made its attempt. It reached up toward the $80,000 level. OKX briefly showed a spike to $79,932, while Coinbase was printing closer to 78,350 cents. That $1,500 gap between exchanges in a single session is a tell. It's not an error. It's a sign of thin liquidity at the top. The market is testing that ceiling without the volume behind it to punch through convincingly. The 24-hour spot volume is around $5.49 billion, well below the $12 billion plus days we saw during Bitcoin's strong April sessions. Futures volume is $76 billion. That spread, $5.5 billion spot versus $76 billion futures, means speculation is running at roughly 14 times the rate of real buying. That is a leveraged market. Leveraged markets move fast in both directions. The second moment, at the beginning of this week, Strategy posted its weekly Bitcoin tracker, and for the first time in months, the column was empty. No purchase. The community noticed. Search volume for Saylor and Strategy earnings spiked on Sunday night into Monday morning. The market is paying attention even if it isn't showing it in the price yet. The third moment happened about 17 hours ago, confirmed across multiple outlets. BeInCrypto, Yahoo Finance, and CoinGecko all flagged the same news within minutes of each other. Strategy will make no Bitcoin purchases this week. The announcement landed 2 days before the May 5 earnings call. That timing is not accidental. This is a company that understands optics. They don't want new buying activity on the books right before reporting a quarter where the price dropped 20% and they were still buying aggressively. The Q1 earnings will show heavy paper losses on their 808,234 BTC holding. That $14.46 billion unrealized loss figure has already been flagged in earlier filings. Tomorrow, May 5th at 5 p.m. Eastern, Saylor takes the mic and the whole market will be listening. Here's the trap. And this is where people donate money. Everyone is going to watch the earnings call and try to trade the reaction. A lot of retail traders are going to see the headline, heavy losses, buying pause, and assume it's bearish. They'll short the earnings. And here's what they're forgetting. Saylor's average cost across all 818,334 Bitcoin is 75,530 taos. Bitcoin is trading at roughly $78,800. He is currently sitting on an unrealized gain, not a loss. The narrative of heavy paper losses is based on the Q1 period when BTC was trading below $75,000. As of this week, with BTC back above $78,000, that position has actually flipped to green. That's not the story anyone is telling right now. And there's another layer to the May 5 story that I want to make sure you don't miss. The short squeeze mechanism is already primed. Traders have been paying out of pocket, paying negative funding rates just to keep their short bets alive. Think about what that means. They are literally losing money every 8 hours just to keep their position open, betting that Bitcoin goes down. And Bitcoin hasn't gone down. It's sitting at $78,800, nudging $80,000. Every day those shorts stay open, the people holding them bleed a little more. If Bitcoin closes above $80,000 on a daily candle, just closes above it, doesn't need to spike, those shorts start getting forced out. They have to buy to close. That forced buying pushes the price higher, which triggers more shorts to close, which pushes the price higher again. That is a short squeeze cascade. And at $58.71 billion in open interest, if it triggers, it is a big one. The level traders need to watch above is $82,228, not $80,000. Everyone is focused on 80K because it's a round number. The real structural line is $82,228, Bitcoin's 200-day moving average. Bitcoin hasn't closed above that in 7 months. If it reclaims that level on a weekly close, it would be the first real trend reversal signal this entire year. That's the level that changes the macro story. Now let me give you the honest scenario breakdown, and I want to be really specific about these levels. Scenario 1. Saylor's May 5 earnings call is constructive. He signals buying resumes next week. He reminds the audience that his average cost is $75,532, and Bitcoin is above that. The short sellers don't get the capitulation signal they were hoping for. Bitcoin's price, already being pulled higher by whale accumulation and negative funding, gets the catalyst it needed. It breaks $80,000. The shorts start getting liquidated in sequence. Price targets $82,228. The 200-day MA within the next 1 to 2 weeks. If it clears and holds that level, the range that's been capping Bitcoin since October breaks. The next zone of resistance above that is around $85,000. Scenario 2. The earnings call disappoints. Not because Saylor says anything dramatic, but because the market reads buying pause as a signal that strategy is pulling back from its weekly accumulation model, even temporarily. Spot ETF flows, which already went negative on April 27th, don't recover quickly. Institutional buyers step back. Bitcoin, unable to hold $79,000 on its own without Saylor support, starts to drift. And here is the part almost nobody is talking about. Between $80,000 and $66,000, there are no major support levels. Traders call this an air pocket. If Bitcoin loses $75,000 and can't bounce, the next serious buyer zone isn't until $66,000. That's a 16% drop with nothing to stop it in between. Scenario 3, and this is the one I think is most underestimated. The earnings call is neutral. Saylor says nothing definitive. The market gets confused, not panicked. Bitcoin grinds sideways at $78,000 to $80,000 through the rest of the week. The tension builds. And then on May 11th, the week the Senate votes on Kevin Warsh as the new Fed chair, the macro setup fires. Because Kevin Warsh has been on record criticizing the pace of rate cuts as too slow. JP Morgan already flagged that Warsh's tone moves the dollar before the Fed formally moves rates. A weaker dollar signal, even just a forward guidance shift, pulls Bitcoin higher. Because Bitcoin and the dollar have been moving inversely all through 2026. The real breakout might not come from Saylor, it might come from Washington. Remember what I said at the start of this video? Bitcoin's biggest buyer just went silent. That's true. But what I also told you is that while he was quiet, 270,000 BTC were absorbed by wallets that haven't been this aggressive since 2013. Exchange reserves haven't been this low in 7 years. The coins are leaving the market. The shorts are bleeding. And the two biggest macro catalysts of the entire year, Saylor earnings and Warsh's Senate vote, are happening within the next 10 days. The silence isn't emptiness. The silence is the setup. One more thing before I go, and I want to be completely straight with you about this. Nothing in this video is financial advice. I'm an analyst and a content creator. I don't know what Bitcoin's price will be tomorrow, next week, or next month. What I've shown you today is publicly available data, cross-referenced across multiple sources, interpreted through market structure and historical context. Crypto is volatile. Leverage is dangerous. The air pocket scenario is just as real as the squeeze scenario. Anyone who tells you they know for certain which direction this resolves is either lying or selling something. Do your own research. Size positions you can afford to lose. And talk to a financial professional if you're making significant decisions. If this breakdown gave you something useful, a framework, a level, a way to think about the next 10 days, that's all I'm here to do. Drop in the comments. Do you think Saylor's pause is a trap for the bears or the first crack in the Bitcoin corporate treasury model? I want to know what you think, and if you want the follow-up video the moment May 5 earnings drop, subscribe and hit the bell, because the next 48 hours could tell us everything.